All right, everybody. Thursday, market wrap. Actually, there was one important development today that I want to talk about. First, I'll just mention that market closed mixed. Dow was up, S&P down fractionally, and NASDAQ down a little bit. So the important development that I want to talk about was the ECB meeting where they confirmed the end of asset purchases. I've been waiting for this for a long time. This is just the very beginning, but it needed to happen. Of course, let's go through the chronology. We had the Fed in December 2015 start to raise interest rates for the first time. At that time, it was the first time in 9 years. We've had 8 rate hikes. We're going to have another rate hike this month, next week. They might pause after that. And then we had a couple of other central banks in a sporadic fashion. I think we had Bank of Canada maybe 2 or 3 times. We had the Bank of England 2 times. But everybody else was on hold. The ECB was on hold. The Bank of Japan was on hold. And more importantly, Bank of Japan negative interest rates, 0% interest rates at the ECB. More importantly, those 2 guys and the Bank of England, by the way, asset purchases, continued asset purchases. Now, I've explained this many times. When the central bank buys assets, it is stripping the economy of higher paying assets and dumping trillions of reserves into the banking system. Those reserves are not helpful to the banks. As a matter of fact, there was a survey recently conducted by the Fed asking bank executives what level of reserves, system reserves, would you be comfortable with? And they said, oh, 600 billion. That was the answer, the response that came back. Well, guess what? There's 1.7 trillion. They don't need all those reserves. So we needed to see, as I've been saying, other central banks, because the Fed was doing all the heavy lifting in terms of raising rates, which is inflationary, it's price setting higher, it's fiscal expansion. The government is a net payer of interest. When rates go up, more is paid out that flows to income, etc., etc. We needed to see the other central banks come on board, and it's been very slow. And the ECB is a very important central bank. I think balance sheet-wise, it's even bigger than the Fed. So the end of these asset purchases, that's a very, very important step. A very important step. We have to at least, the ECB has to at least stop ramming trillions of reserves onto bank balance sheets, because that hinders their ability to lend. Yes, everybody, I know this must come as a surprise to you, but the banks, they don't lend reserves. Loans create deposits. Loans create reserves. I'll save that for another video. Just follow me with this. We needed to see this happen. Finally, they have committed to ending asset purchases. This is a big, big step. It's bullish. It's bullish for the world economy. By the way, we are seeing, in addition to all this stuff going on, really kind of the end of austerity. I mean, we've seen it now in France as a result of these yellow vest riots. I'm not even going to call them demonstrations, riots. Macron is promising higher wages and tax cuts. So we're seeing this all over. We're seeing this in the United States, obviously, where there is record fiscal expansion. We're seeing the relaxation of budget constraints in the Eurozone. Maybe not for Italy. France exceeds its budget constraint. You now don't hear a peep from Brussels on that. So it's starting to happen. And this is the underlying fundamental, from what I can tell. I do not see anything in the fiscal picture, in the bank metrics. When you look at the bank metrics, in employment and jobs, these are the 3 most important things. Ultimately, the market is going to follow the economy. This sell-off was absolutely not corroborated by anything economic or economically fundamental. We saw a small slowdown in fourth quarter GDP growth. It's going to go from 4.2% to 2.8. 2.8 is still a very good GDP growth. Remember, we went for years and years and years not even approaching that. You don't see negative GDP. You do not see mass layoffs. Unemployment benefits being paid out are falling relative to last year. We just saw a big reversal in weekly claims for unemployment insurance in the number today, back down near a 50-year low. All of the important things, fiscal support, bank metrics, employment, the labor market, nothing in there, not a single thing in there suggesting any sort of meaningful weakness. Maybe a little bit of a slow patch because of all the fear that was ginned up as a result of the talk of trade war and the threats of trade war and all this. And again, there hasn't been anybody out there, with the exception of myself, who has worked up the numbers to show that even if it was a full trade war against China where Trump put 25% tariffs on all 500 billion of goods, still not enough to put us into recession. I have the numbers. I sent them around. If you want to see the numbers, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. Or you could sign up for a 30-day free trial of Zombie Trading. That's my Forex signal service. We front run the zombies because we know how they're going to behave. And we get out, we take their money and get out before they die. So everything is on track. We needed to see this happen today with the ECB. It's a very, very important step. I cannot overstate the importance of this. Now, I would love it if they started raising rates. I would love it if they started to reduce their balance sheet, but step by step. We're talking about the ECB, like ultra cautious and conservative. These guys don't even realize. They don't even realize that the stuff that they have been doing since the crisis, going back, 10 years, the stuff they have been doing has been hindering economic growth, has been hampering the banks, has been creating a situation where the banks constantly have to raise capital. This is the problem also with Deutsche Bank, with what the ECB has been doing. It's not helping the banks at all, at all. It is hindering them. It is hampering them. It is making them on a constant search for more capital to meet capital requirements laid down in the Basel III. Had to have this happen. It finally happened. This is a small step, but it is a very important step. Very important step. Now, if you really want to understand all this stuff, because again, I'm the only guy out there who has an applied approach to MMT. I take the concepts of MMT and I put that together into a trading and investing outlook for the market. Got to go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. Got to do that. If you want more understanding, if you want to learn, if you want to educate yourself, if you want to have knowledge that puts you above the rest, you got to get aboard. You got to get on board. All right, everybody, big thing today. It's going to make a difference. It'll take some time, but it was a necessary development. We finally saw this happen. It's a positive. Take my word for it.